Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. It is Friday, December 14th. Hope everybody's having an absolutely amazing day. Welcome to the Daily Market Commentary, where we take a look at the same 10 to 12 futures markets every day, identifying potential turning points and breakout trades from an educational perspective. And the key is we leave the lines on the charts in order to be held accountable to the levels that we identify. If you're new to the channel, do me a favor, click that subscribe button down below so you get the updates as they come out. Let's dive right in. So S&P's down this morning. We're down a little under 1% at 24 points. For those of you that were on our YouTube live session last night, we talked a little bit about this breakout trade. But this breakout trade, for those of you that were in the live trading room, is working out exceptionally well. The trade that we had talked about was getting short up in this level and then potentially adding to the position when price comes back into here. And so that is continuing its move to the downside. We actually have rallied back up just a little bit to give you another bite at the apple in case you missed the breakdown. So the breakdown trade is still running. I'm going to remove the lines at this point just because they are not going to be necessary. Now, I leave this area up here because this area does still exist. This is a little bit of a wick over wick level. You see a tiny little wick up here. You see this longer wick down there. That is a little bit of basing after a pivot high, right? A little bit of basing after a pivot high. So that level still remains intact. We've come down and hit target 1, and now we are beginning a little bit of a rollover on this little reversal point. So if you're not short and you wanted to be short, I think there's still room to get down. I think today we could go down and touch our eventual 2608 breakout target. And the reason why it's searching for that area is because that's the origin of this move higher. So, you know, our target is actually just before the competitive buying would begin, which would be down here at this 2608 half region. As far as adding anything new, like I said, I think it's okay if you wanted to short off of this little reversal here. You know, I'm not going to add too much new. What I don't want to do is go out and force a buying trade. And the reason I don't want to force being a buyer is because on my big picture, I've got lower swing lows and lower swing highs, right? So I'm not going to force a buying trade, although there may be one in here. I don't want to force it because I think I need to have one. Price needs to come into my area in a way that convinces me to be a buyer, and right now it's just not doing that. In the NASDAQ, so those of you that trade the NQ, our NASDAQ level also met entry and then came down. We talked about this as our confirmation style entry yesterday. So that level is no longer valid, but both levels worked out very, very well, continuing their move down. If you still want to short NASDAQ and you feel like you've missed the move, theoretically you could just get low. You could get short once we get below the prior candle's low and trade it in a candle-to-candle format. So getting short below 6,700 and letting that run down in a candle-to-candle style. Looking at the crude oil. Now, crude, I was completely wrong on this setup. So it's great that I was right on the NASDAQ. I was completely wrong on this one. And so why was I wrong? Well, the first level was a confirmation style entry. And we came into the level and then blew right through it. So that level violated. The next level was this area here for potential reversal. We popped above it almost instantly, came back down just a little bit, and then boom, blew right through it. So why did this level fail? Because it did, right? There was news, there was macroeconomic news that came out that trumped our zones, that there was more orders that were put in than left behind, and so that's why our zones no longer worked, right? That's really the reason zones fail is because more orders get put in of the opposite nature than are left behind from the origin of the move away. And sometimes macro fundamentals and big picture news will indeed do that. So now we're still in our sideways price action for crude oil. One of the things I'm going to look to do is to see, is there a crude oil options trade? So we'll do that probably. We'll probably do that in the trading room this weekend, is look for an iron condor around crude oil. It's been chopping sideways. There's no reason to continue to try to force a trade. But what if I can, maybe find a condor around it where I can have some areas that can let it trade inside of a range. Now, remember, the thing on all of these is that you still want to be able to pick a direction. I'm just picking the sideways direction, right? If indeed that it gives us enough credit. So we'll look at that over the weekend and may have something to come back and report. Gold. Now, gold, I had a bullish bias. I really actually had a pretty strong bullish slant based on the fact that we had a little bit of a falling wedge here in an upward trend. However, that broke out the other direction off of this little bit of basing and has not been able to reverse course. So gold is more bearish than it is bullish right now. And in looking at gold, there's this little wick over wick area here where we've already reversed off of that once. We're getting a little bit of buying pressure coming in with these lower wicks on these couple of candlesticks here. So let's see if we get another pop higher. If we do get a little bit of a pop higher around the open, there could be a reversal opportunity in there. At the moment, there's not, though. I need more evidence before I'd be willing to place anything or set anything up. In the bonds, so yesterday our bond market gained a little bit of strength. We popped above our potential breakout area. So now really the bonds is in a range between two potential breakout zones, and neither one of them, have shown any sign of breaking. Right, we came close to the area here, base in front of it, and then popped up, which is actually good. Obviously, with any basing, whether it's up or down, I want to see a little bit of, with any breakout, whether it's up or down, I want to see a little bit of basing before that level occurs. In the Aussie, so the Aussie, we did get a little bit of a sell-off yesterday. I talked about this rising channel, and then we sold off just a smidge. So to me, the area that I'm going to identify is this level right here, which is this little wick over wick zone below a pivot high. And that's actually found on the hourly chart. I don't know why it's showing up in purple. Okay, so there's my level on the hourly time period. We may get a reversal right up in here. It may not make it all that way up because this is our 2 a.m. European market open, and I always pay attention to that European market open as a potential reversal point. In the euro. So the euro, we had this humongous gap up. So let's talk about trading these gaps. We had a humongous gap up in the euro, and our huge gap up in the euro right here after a humongous sell-off to the downside. Right, so we gapped way up right into our zone. Now still sideways price action, but moved up deeply into this zone, and then started a really precipitous sell-off and a big drop. Right now, we're now on the March contract, and that would be our reason for the huge sell-off, right, coming out of that level and the adjustment. But this is a classic picture perfect. Price came into the gap. Who's buying after that gap up? Right, on that new contract, right, and that's really what I'm looking at is it immediately sold off out of that area. So let me know in the comment section below, is that something that you were able to kind of see and play with, or did you just kind of stay away from it? Which most traders, probably would, and this is really where we get into contract specific and how we use the different futures contracts. So a good way to see that, right? Because the way this particular broker does, whenever prices will change. This is the March contract. If I just look at the December contract, on the hourly chart, you don't see that humongous gap, right? We just see the strong sell-off. If I look at the March contract, which is, no, that's December of 19. There we go. If I look at the March contract, we don't see that strong, we don't see that gap. The reason we see the gap is because we move from the December to the March in this particular platform. So your platform may or may not have that. Either way, we still came off of this area here, which was the level that was predetermined and identified ahead of time. Strong move away. So now for that level, I'm going to have to remove that level as it's no longer in contention going forward as a potential trading candidate. Next, Canadian dollar. So in our Canadian dollar, so this one, we had a potential 15-minute level. Thought maybe we'd get a little bit of a reversal here. We didn't. We popped around, and then on the contract rollover, we gapped up, and so now it is still basically unchanged from that area. Looking at Great British Pound, Japanese Yen, same deal with the contract on the rollover side. Came up into the level, and then now is selling off of that level. The area that I'm going to actually pay attention to today is this area down in here for a potential reversal, which we have a little bit of basing before a pretty nice rally up in price that had some decent strength to it. Insofar as the Japanese yen, we had our Japanese yen reversal trade. Price came into the level, and it's really moved away nicely. Then we had our contract rollover gap, and whoo, did we have a contract rollover gap. This is why we don't hold things over rollover, because if you're in the wrong spot, then you're going to get totally hammered. But it gapped up into this area here of essentially supply, and it's kind of moving around. So nothing to add on this one as of yet. Copper had set up a short little level in copper, potential reversal trade confirmation style entry, and then it broke through the next level there. So copper's level there, which we found on the 15-minute, did not hold. And you can see that we came into it, moved away, came back, and then for a number of candlesticks did nothing. Remember, my rule for those of you guys that don't watch every day, if price comes into my level and it doesn't move after 6 candlesticks, I'm out of the trade. I need it to move within those 6 candlesticks if I'm going to be willing to take something. If it doesn't move inside those 6 candlesticks, sometimes it's just not going to move. So keep that in mind as you head into next week's trades. Those of you guys that are Traders Army subscribers, I will see you on our live session Sunday night to set up our options trades, our swing trades, and our longer-term futures positions. Those of you that are not, go to tradersarmy.com, subscribe today, see how you can get a chance to join us, and see if it's fun, see if you like it. All right, talk to you soon. Have a great weekend.